What is up, traders? What's up, tycoons? Super excited for today's video. We're going to be given a breakdown of ZIM, ticker symbol ZIM. They recently just paid out their dividend, and it's paying a fat dividend, guys. So it has a lot of people's attention right now. But they also just announced some really big news that you guys need to know about, right? And I think it's really good news. And it also involves natural gas, specifically LNG, liquefied natural gas, which US has become a major global exporting powerhouse when it comes to globally and, just the LNG market. So we're going to dive into that as well as go into the charts, all right, and take a look at the daily chart and look at some of the key levels and prices that I'm paying attention to right now. So make sure to smash that like button, subscribe to the channel if you guys are new. I do these viewer requests every week as well. So if you want to see your stock in the next video, all you've got to do is comment down below and I'll be happy to get to it as soon as I can. Now, I mentioned that they just paid their dividend here recently of $6.40 a share. This is a big dividend, guys. This stock is currently trading around $21. Okay, now if you take a look here, the current price at the time of this recording is 21.65. All right, and it's got a dividend yield of 78%, guys. This is a huge dividend yield. The annual dividend is going to be right around $16.95. And as I mentioned, they just did their payday on April 3rd, just a couple days before my birthday. All right. Now, in full disclaimer, the content provided in this YouTube channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. Myself and any individuals on this YouTube channel are not registered financial advisors or brokers, and trading in stocks, bonds, commodities, or crypto involve a significant risk of loss and is not suitable for all investors. So be sure to read through the full disclaimer. We're going to go ahead and hop into it. Now, if you guys are new to the channel, I actually have a 50K portfolio challenge where I specifically invest in dividend stocks and run the wheel strategy on those dividend stocks. And so you can see ZIM has been on here. I've been holding ZIM for a very long time. Now, I am down on my, average cost per share. Okay, if you look here, my average cost is about $26 and the current price is $21.65. So I definitely am down about 17%. And if you look, that's a paper loss of about $449. But take a look at how many shares I own, guys. And I've been owning this stock for a while and collecting dividends off of it for a while, especially in this 50K portfolio. And so that right there is $640 at $6.40 per share at 100 shares. That's $640. So that makes up for the losses that you see right here on the paper losses for, the shares that I'm down on. Now, I've also been selling covered calls on ZIM, creating passive income that way as well. And, this isn't my first dividend payment I've received as well either for ZIM. So, pretty exciting stuff. And, I've been really excited about this stock. If you look at the portfolio breakdown, it is about 5% of the portfolio. And in this 50K portfolio, we do have a total yield of about 6.5%. All right, bringing in about $2,500 right here on the annual dividends. Now, if you take a look, the amount of money that we have invested here, which is about 39,000, just under 39,000, has a total market value currently of about 43,000. So it's up about 10%. So not too shabby. Okay, nothing extraordinary, nothing crazy unrealistic. As you can see here, there's many positions I'm down on. All right. I definitely recommend, just checking out that playlist, the 50K portfolio challenge playlist, so you guys can stay up to date and really see how this portfolio has changed over the past year and what things I've added, what things I've taken out. Most notably, I just added SWK as my new dividend stock here. All right. This is Stanley Black & Decker. And I did so because it was at the COVID-19 pandemic prices. And we can see that that position actually is up about 7%. And it's one that I'm looking to build out slowly. And I do think that there is a chance it could come back down lower, below my average cost. But currently at the moment, since getting into that play, I am up on that one. So going to be interesting just to see kind of what happens there. All right. There's a few other stocks I have in there, but we won't spend too much time going on this. Let's get back into ZIM and go over that really important news that I think you guys need to know about. Now, ZIM and Shell, they just completed their their first LNG bunkering under a 10-year LNG supply agreement. So this is good for ZIM, okay? This is contracted work, and this is 10 years of contracts, right? So they're going to have this business, as long as things don't change, but, for now, they're going to have this business and be able to plan on this business for the next 10 years. So ZIM and Shell North America, they are pleased to announce the successful bunkering of the ZIM Sammy Ofer container vessel with liquefied natural gas, which is LNG. This vessel was bunkered at Kingston Freeport Terminal on March 26th of 2023. And you can take a picture of it here and, or not take a picture, but you can take a look at the picture there. Now, this milestone, or rather, this was a milestone operation for a number of reasons. It was the first time a simultaneous operation was completed with LNG bunkering in Jamaican waters. Kingston, Jamaica is a new LNG bunkering location for Shell, expanding its global LNG bunkering network to 16 locations across 11 countries. To date, Shell has already achieved over 1,000 safe ship-to-ship bunkering operations to its customers. This is the first in a series of 10 15,000 TEU LNG dual fuel container ships, which ZIM plans to deploy on their ZCP trade line. For these vessels, ZIM recently signed a 10-year marine LNG sales and purchase agreement with Shell. So, I think that this is pretty interesting. I've actually been covering natural gas a lot. I've even made LNG videos as well. And so it's just nice to see some of the two different things that I'm paying a lot of attention to, start to coincide with each other and start to do business together. Now, this right here was our previous setup that we had on ZIM, on ticker symbol ZIM. And I actually mentioned to a few people in the Discord right around this time, I said, hey, now if you own ZIM shares, would probably be a good time to get some put option contracts as a hedge. Now, if you're not familiar with options, you can buy calls if you think a stock is going to go up, and you can buy puts if you think a stock is going to go down. So if you own shares, what you can do to hedge yourself to the downside is, buy some put options, right? If you think that there's potential downside coming, you can protect yourself a little bit and hedge yourself with some put options. And that was a really great opportunity to do so. Okay, we were at $25 a share and we dropped all the way down to $17 a share. So pretty significant move to the downside. Now, since we came down to that $17 region, look at the very strong rebound. Okay, we're actually filling the daily gap up we have right now, which is this blue box right here, all the way up to about $22.60 is where that gap goes up to. All right. Currently, we have about another dollar to go if we are going to actually fill that gap. Now, these gaps are significant because gaps tend to fill about 90% of the time historically. The big question is when are they going to fill rather than if they're going to fill. So if you take a look and we extend the previous gap that we had, you can see that we actually came up and filled this gap right here on this daily candle wick when we came up to the top of that gap. So it took a while for that gap to fill. This gap was in December of 2022. And you see here that the gap did not fill until, basically the beginning of March, the beginning of April and the end of March. So it took about a quarter for this gap to fill, but eventually that gap did fill. So I love charting up gaps and paying close attention to them. Oftentimes I set alerts when we get near a gap and when we start filling a gap. That way, I don't have to constantly be looking at the stock to know, and I can rather just get an alert to my phone or to my email letting me know that, hey, this stock is approaching its gap and has a potential to try to fill that gap. And so that's what we're seeing here currently. Now the stock did go down a lot whenever it paid its dividend, but afterwards we had a very strong rebound. Okay. And a lot of people were pretty bullish on this stock. All right, now what we're going to do is we're just zooming in a little bit more, and I kind of want to go over in more detail some things and, some ways that you can use technical analysis to help give yourself an edge, okay? Because the market is really like a battleground, right? A battlefield. It's like going to war, okay? And the more weapons you have at your disposal and, knowing how to use those weapons properly, is really going to give you guys an edge, right? And that's what you need when it comes to the stock market is you need an edge and you need to find your edge. And so some of the things that I like to use are, technicals and technical analysis, one being bearish divergence. So if we take a look here, indicated by this circle, clearly the stock was in an uptrend, right? We have what's known as a high and then a higher high. So again, clearly in an uptrend. But if you take a look down here at your RSI, this is the relative strength index, and they're going to measure the relative strength of a stock at its given price. And what we have as a high and then a lower high. So we have a divergence here where price action is going higher, making higher highs, but the RSI is going down, making lower highs. So we're losing relative strength as the price is going up higher. And that's an indicator we could see some type of bearish activity and get a pullback. And sure enough, we did end up getting a pullback, and we formed a little bit of a supply zone up here. And then we came up and retested this supply zone, and we put in a double top, right? So we have a top here, and then we have a top here, clear double top pattern. And I was also on the lookout for a head and shoulders pattern, right? So we had that double top, we had a little bit of a head and shoulders, and then sure enough, we ended up getting a sharp drop to the downside. Okay, now on top of that, what you can do is you can also use the MACD, which is your moving average convergence divergence. I know that sounds really complicated, but it's actually a super simple indicator to use once you understand. And what you're going to be doing is looking for potential entry and exit signals based off this red line here. So when you see it cross down to the downside, that's typically known as an exit signal, right? And so what we see is we have bearish divergence where the price action is making higher highs with the RSI making lower highs. And then shortly after that divergence, we end up getting a bearish crossover to the downside known as an exit signal. And sure enough, we saw a move down from the $25, $24 region all the way down to about 19. Just above 19. So, about a $5 move there, about a 20% move. And that was a little bit foreseeable, right? Now nobody could have predicted exactly how much the drop would have been. Nobody could have predicted that the drop was guaranteed to come. But now that we're using two weapons, right, and helping try and give ourselves an edge, we're seeing that, hey, there's an increased likelihood that we're going to have some type of bearish activity just based off some of the technical analysis. Now, currently, what we have, okay, is a bearish channel that we're trading in right now. And this is pretty systematic, okay? If you look, we're testing the lows and we're rejecting the highs right now. And we're going to look to see, do we stay range bound and keep trading in this bearish channel? Or do we perhaps get a breakout to the upside and retest this supply zone here that we rejected multiple times in the past here, as well as here and here? The more times you test the supply zone, the weaker it gets. A supply zone is simply an area where there's an imbalance of sell orders, and there's a lot of sell orders in this region, and that imbalance keeps pushing prices lower. Now, the question is, are these sell orders getting filled and replaced? If they're getting replaced by the initial sellers here, then this supply zone is going to be strong. But if these orders are getting filled, that means that that imbalance is slowly diminishing, and eventually you'll hit a point where you get equilibrium, and that's when you get the consolidation. And ultimately, if all the sell orders fill and there ends up being an imbalance of buy orders at this area, we could potentially see a breakout. So, 24 to 25 is that big overhead supply zone that I'm paying attention to right now. We are still trading in this bearish channel, but in this bearish channel, we still have room to fill up on our gap before we even hit the top of the channel. So, I'm going to be paying close attention, see what happens there, see do we end up filling this gap sometime soon, or do we pull back and that give us more room and more time later to fill the rest of the gap. That's pretty much going to be it for today's video. Hopefully you enjoyed it. So make sure to smash that like button and subscribe to the channel if you guys are new. Don't forget, I do these viewer requests every week. So if you want to see yours in the next video, all you got to do is comment down below.